That's fits with the notion of the chaos theory. When you get an incremental arm wrestling trend, but suddenly things aren't really where they ought to be. So the market says, damn it, I'm going there. And it
Right.
does it. And it does it in a whoosh. And it's
Right.
shocking. And I think we're facing that pivot point right now where we're about to go from this arm wrestling nonsense for the last 8 years, $100, $200 drops, $300 drops, et cetera. Sometimes in 2 weeks, you drop a couple $100. Remember March 2020? Gold was up 16, 1700. Next thing you know, you're in the 1400s. A few weeks later, you're making new highs again. Okay. So I think that process is about to wrap up and we're about to go into the accelerated.
Michael Oliver, a renowned metals analyst and founder of Momentum Structural Analysis, is predicting a significant rise in gold and silver prices in 2024. For decades, since at least the early 80s, Oliver's structural analysis firm has been providing unique technical research on stocks, commodities, debt, and foreign exchanges to some of the biggest investors in the investment firm, including banks, large hedge funds, mutual funds, and other top players. To achieve a more precise prediction model that cannot be gotten just by looking at price movements, Oliver uses a momentum-based method of technical analysis, a method he developed in the 80s after working with some top guns in the investment world. Rather than fixating on small upside or downside moves, Oliver tracks momentum to reveal built-up trends that can provide useful insights into future price movements. Oliver has adopted this same momentum-based analysis for his latest predictions for gold and silver, two assets whose trends and performance he has been tracking for over 5 decades. By Oliver's estimate, there was a big and permanent shift in the ongoing metals bull market when gold made a new all-time high earlier this month. According to Oliver, that shift led us into the next phase of the bull market, which will be marked by higher gold prices and a complete outperformance by silver. We will now bring you clips from Oliver's recent interview with natural resource stocks. Please watch, share, and like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks, and enjoy the video.
Finally, you bottomed in what? Late 2015. Gold made a low at 1,050 in December 2015. 2 months after that low, February 2016, our annual momentum of gold, not price, broke out of a massive, very clear basing pattern that you could not see on the price chart. Price was zigzagging down. Momentum built this base. We broke out of that. Now, ever since that buy signal, nothing gold has done on the downside. We've been in a lot of sell-offs. In fact, we had a 22% sell-off between the March 2022 high and the September 22 low last year. It was 22% drop. Intraday high, intraday low. There are a lot of other drops along the way over the last 8 years that have been, 10, 15%ers. None of them change the annual momentum trend assessment that we had. It remained positive despite these sharp zigzags, which impressed everybody. Everybody, oh my God, gold's over with. Every time it turns down, gold's over with. What just happened 2 weeks ago, gold went up to the old highs that we saw in 2020, 2022, and early this year, all above $2,050 US. Couldn't get to 2,100. Sold it off again from the March high this year down to the low 1800s, 1820 something, I think. When it came up off that low, got in the 1860s, we said, okay, this is over with. The downside, the process, the arm wrestling that we had for 6-7 months was over. Just a corrective pullback, again, from that flat price high. The problem was what happened recently was we went up and took out those highs, but it's so, bleeding obvious to anybody with a price chart that if you were a deeply entrenched bear and you wanted a protective stop, what would you do? You put your buy stop at 2,100. Or if you were a lagged bull that needed to have that proof of breaking out over the 2,100 level, you had a buy stop there. So in the dark on Sunday night, December 3rd, in the dark, electronic trading, you went up, hit 2,100 and went boom to 2,150 in a heartbeat. What happened there? Well, what happened was you hit all the buy stops. Okay. And you created a void. In other words, you exhausted the buy order. And in you had 48,000 contracts trade within that hour. It's like a record. Okay. And then as I understand, and my son has researched this, that in fact it's the case, the Bank of International Settlements came in and dumped some gold there. We got up to 2,150. So, whether that's manipulation or well, let's ignore that. But they sold there. But the problem was you just exhausted all the buy orders below. I mean, there was like nothing, so you probably could have shorted 10 contracts and had gold drop $50 because all the buy tickets just got blown. So at least the first 50 or so dollars was a void. And sure enough, it came back down, even got under 2000 this week, got down to 1987. Then we zoomed back up within one day into the 2060 levels yesterday, and today we're around there too. I think that low was it. It was just a volatile, price-based, stupid situation where if you thought you could buy at 2100 and get rich, you're buying late, and you're buying with every other idiot who's covering his short position and going long late in the game. Okay. So you got this turbulence and everybody go, oh my God, gold's top again. Okay. We don't see any evidence of that in momentum. I think gold is about to enter what it normally does late in bull trends. Remember, this is 8 years old already. 2015 low, 2023, 8 years inclusive. Is it gold accelerates in its final year or so of bull trend in a big way to where most of what you gain in the overall bull trend is compressed in time, like in the last year. You go back, want another example, go back and look at 1974 through 75. Gold came up from the 30s and suddenly it was 200, most of that in the tail end. Then you look at the bull trend that peaked in 1980 after multiple.
I remember that.
Yeah. Where did most of the action occur? 1979.
79, yeah.
Yeah, literally a few quarters before the January peak in 1980. You went from like a couple $100 to 850, boom, boom.
Oliver likens gold's price movement since 2015 to an incremental arm wrestling trend. While gold's overall performance might not be exactly satisfying to investors, no one can deny that the precious metal has had some really nice upside moves over the years. This is despite the rhetoric that precious metals like gold and silver are basically dead and have no more steam left. In addition, Oliver is certain that we are now at a pivot point, which will put an end to the arm wrestling nonsense of the past 8 years and send gold prices into an accelerated phase. During the interview, the renowned metals analyst further discusses his predictions for gold and silver as we head into 2024.
I'm going to guess that once, and it's based on historical, not just what gold's done over the last 50 years in terms of how did its bull markets behave, but it's true with many markets. Particularly commodity type markets where late in the move, you get the verticality, or late in the move, you get the collapse. Instead of arm wrestling decline, you get a puke. Okay. I think we're going to see that soon. And I think one of the pieces of evidence of that, if you just look at a price chart now, would be the people who thought the breakout over 2100 was false because it fell back down for the reasons I discussed. You get back up there again over the next couple of weeks, let's say get to 2100 again. In other words, back above the 2020 high, the 2022 high, and the early 2023 price high. So the 2050, but not 2100. You get back up there again. People are going to say, well, it wasn't a top. They've said this repeatedly. Oh, it's a top. Oh, no, it's not. Okay. And all during this 8 years, we've had that process. But this time, I think once you do that again and go back up to that 2100 and touch it, I think at that point, people will realize, golly, it's just volatility. We've been stressing this in our reports. In fact, we sent out a price chart of gold going back to 2015 a few days ago just to make the point. Circled all the drops, defined their percent decline, how fast it was. And they're all meaningless. And yet they shook people out all the way up. And so the guy who basically sat back, smoking his cigar, whatever, and got in at a good time, like in early 2016, which is our primary buy point. And basically just sat back and ignored the day-to-day, even the week-to-week, but just looked monthly closes. Oh, okay, I had a down month. Okay. But basically sat back and relaxed. He's caught the whole thing and he's still relaxed. It's the people that focus in on the day trader type elements. They can whipsaw it in and out and they never catch the move. It's just by the nature of the market. They'll get whipped out and they won't get back in one time and they'll finally miss it. It's also at that point that we've seen something else happen for gold and related, the monetary metals, especially for silver. If you go back and look at, let's say, the 1976 low in gold, which was just above 100 after having been at 200 in 1975, And watch the process upward from that $103 low in August of 1976 up to the January 1980 high. And look at the arm wrestling price action of gold, and then it exploded. And look at silver action at the same time. And you'll find that during that incremental phase of the bull, first couple of years of that, silver was mucky. Yeah, it was generally rising with gold, but it certainly wasn't outperforming. And it would whip you more than gold would. It would be stronger in the surges and then weaker in the pullbacks. We see that all the time. It was at the tail end of that bull move, like in 1979, silver beat the pants off of gold. It went so vertical that, you could have shorted gold, bought silver, made a ton. Same was true in the 2000 bull to the 2011 bull top. If you look at that action, the first 6, 7, 8 years with arm wrestling, even for gold and for silver as well. It was in that last year, especially 2010, silver went ballistic relative to gold. So not only was it the last phase of the bull market where you went dynamic in net price, but on a relative performance basis, that's when silver jumped in front of gold and beat it.
Oliver is one of the many metals analysts predicting that silver will significantly outperform gold in 2024. Most of these analysts are predicting that silver will perform just as it did in 2011, not only dusting gold percentage increase-wise, but also easily hitting new highs. Do you think this will be the case in 2024? Please share your comments and observations with us in the comments section. If you are yet to do so, also ensure you like this video, subscribe to the channel, and turn on post notifications for more videos on gold, silver, and other metals. Thanks for watching.